Take that break, come back, we'll get to closing bell.
Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Nikkei, that's the Japanese index, that's down 0.3%.
We're going to do a dividend, and we're also going to be reducing debt.
Policymakers are confident that Indian financial sector can withstand the onslaught of global FDI.
25,940 is the first tick. 58,500 is on the Nifty Bank.
When you talk about mass consumption categories like staples, footwear, apparels, etc., we think the growth is going to be a shallow recovery.
At the market level, there's clear signs that the persistent downgrade cycle for earnings has really stabilized.
We're slightly off the highs of the day, still that 26,000 turning out to be a bit of a resistance zone for the indices, but still in the green.
Adjusted loss for Tata Motors standalone business was at rupees 237 crore versus profit of rupees 15 crore in the same quarter last year.
There are stress points across the US consumer. There are some cohorts of the US consumer who have clearly exhausted all of their pandemic-related savings.
I mean, most of the portfolio is firing, whether it's international, whether it's the diversified portfolio, and most critically, the value-added hair oils.
We have the Nifty, which is up around 65 odd points. We have the Bank Nifty, which is really powering ahead in today's trading session.
Well, that is the day so far. You're with us here on a fresh new edition of Closing Bell, live from the CNBC-TV18 Motilal studios. I'm Prashant. With me, my colleague Surabhi, and Nigel is joining us from the newsroom floor. Surabhi, hi, afternoon.
Hi, good afternoon. And Prashant, not a bad day for equities, actually. I mean, the market has managed to chug along at a fairly decent pace. For the time being, the Nifty is actually clocking a gain of about 90 points. Midcaps have done even better. And we continue to be in that zone of 26,000. This, by the way, against a backdrop where global equities haven't had any sort of a roaring day. Asia has had a mixed picture. And European markets, for the time being, actually are trading weaker. There is that sense of unease around the whole AI trade, Nvidia's numbers, etc. So global markets are cautious. But here the bulls are building on 26,000. Nigel, the question is, can they cross this hurdle, right? 26,000, 26,100, that's been the speed bump. Okay, I think we'll get to Nigel in just a bit. But yeah, so that's the picture on the Nifty. Let's actually talk about what is taking it higher. If you talk about winners on the upside, today has been a decent day for auto stocks. Some of the financial names have done really well. The Bank Nifty has led from the front. Look at it, Bank Nifty, up 3/4% now. So it's really, really doing the heavy lifting. But then also auto. Look at Eicher Motors, Bajaj Auto, Maruti, Mahindra & Mahindra. These are powered up. Bank Nifty led by HDFC Bank itself, Kotak Mahindra Bank. So the banking names are doing a fairly decent job. And IT is also not disappointing. Some of the large cap IT names are also contributing to the upside. So all in all, Prashant, I guess it's a good looking screen. Maybe people won't complain. But yeah, can we get that decisive breakout above 26,100? I guess that's been the critical question.
Yeah, that's a very critical question, Surabhi, absolutely. PSU Bank Index is, by the way, the one which is shining the most. It's up about 1.25%. I mean, everything else, much lower, the next is Auto Index, which is up 0.8%. And the Private Bank Index is up 0.75%. Midcap Index is up 0.75%. So there's only actually one sectoral index with gains of over 1. That is the PSU Bank Index, which is, something interesting. Wide variety of volume-led gainers across the board. And, there's a lot happening. The new listing, 5 days old, which has now crossed 1 lakh crore in market cap, holding at the #1 position in terms of volume-led gains, that is Grow. It's at now 171 rupees, which is basically, I think, at the day's highest point. Another 15% pop coming through on this one. So on the show today, we'll, of course, talk about markets which are building on gains, banks and focused PSUs in particular. Midcaps, of course, are doing well. Growth stellar continues, and we'll kind of put out some valuation numbers, etc., where things are. And Hormuz will do that comparison with listed peers shortly. Narayana Hrudayalaya, record revenue, profit, stock had corrected quite a bit, coming back very, very sharply, 12% rally. Ekta will join in on that with everything there. We've got an interesting lineup of speakers as well, starting with Gautam Dugan in just a bit. How should you position yourself in the last hour? That's the question. Mitesh is with us to answer that. Mitesh, good afternoon. Good to have you here. 25, just around 26,000 now. So it's a good-looking screen overall.
Oh yes, I think it's a very good screen, and we've had a very quiet day in the sense that the candlestick width is slightly on the lower side, and the range is slightly smaller. But I think we've maintained that we'll possibly head towards 26,100, which was the swing highs which the markets made in last week of October. And once we cross that, even 26,275, 280, which is the all-time high. So I think the structure remains on the upside. Hence, the move is happening there, and that was the higher probability chance in which ways. And now on the stock side, I have a buy on GMR Airports with a stop at about 95 for targets of 104. And Marico, I think, is making a fresh swing high. So buy here with a stop at 748 for targets of 780.
Okay, all right. So those are some trades coming your way from Mitesh. Let's talk about the other one, right, which is moving, as I said, which is Narayana Hrudayalaya. And it's a 12% pop coming through. So let's just get that out of the way first up on the second quarter numbers. And what else is leading to this kind of a move? Ekta is here with more. Ekta, over to you.
Well, extremely strong numbers which came in for Narayana, and that's the reason the stock is being rewarded today. So the revenue was up around 20% this quarter. We had the Q-on-Q numbers also in terms of sales grow around 9% for the quarter. The EBITDA was up 28% year-on-year and 18% on a sequential basis. So very strong operational performance because the margins improved both Q-on-Q as well as year-on-year to around 26%, and the profit was up around 30% year-on-year and 32% on a sequential basis. Now, it was the highest ever revenue and profit which was recorded both at India level as well as group level. So the India business was up around 8.8% on a year-on-year basis. We had the Cayman revenue which came in at around 432 odd crores. The domestic growth was really aided by increased footfalls, improved payer mix as well as the clinics outreach business. And the domestic insurance business, they've also indicated, has shown strong momentum and they expect to build on it. So overall, strong performance coming in for Narayana on all of the metrics that they've reported this quarter, and the street likes it.
Okay, that's Narayana Healthcare, and the stock has been doing really well today. One of the star performers on the back of those earnings. Ekta, thank you very much for that. Well, we have with us Gautam Dugard, Head of Research Institutional Equities at Motilal Oswal Financial Services. Gautam, thanks so much for joining in. Great to have you in. You know, and having you on the conversation also usually tells us it's the end of the reporting season. So it's a fantastic time. Earnings are done. And you know what? Just going by anecdotal evidence, and Ekta was just kind of adding to that, right? We've had a fair amount of pleasant earnings surprises this time. So you tell us, how is the tally looking like? And, you know, where are we with respect to the Motilal universe, with respect to the Nifty? And are we on track for at least 12% plus earnings growth this year?
Hi, Sobi. Good afternoon. Thanks for having me. So look, this was a very interesting quarter. You know, if you just go by headline numbers, they are a bit more deceiving. And if you look at the aggregates, they give you a very different picture. And when you basically dig down a little bit, you get a very different picture. Plus, different cohorts and different sectors have performed in a very divergent fashion. So on a very broad basis for our coverage, we have seen about 12% earnings growth for the quarter, which was in line with the 9-10% that we were expecting. Obviously, bolstered by some of these global cyclicals like metals and OMCs. If you strip out the metals and oil and gas, the growth is somewhere about 6%, which is again in line. Nifty is slightly tricky this quarter because some of the cyclicals have had a very turbulent quarter. So you looked at Tata Motor numbers, which came a few days back. There was a loss in Indigo, which is now part of the Nifty. And even companies like Coal India and all have disappointed. So if you look at Nifty earnings, they were very flat, just about 2% growth versus expectation of 5%. But the interesting thing is, if you look at our coverage universe and then look at the large, mid and small cap cohorts, the midcaps have really outperformed once again. And the extent of outperformance is just expanding. This is now the sixth quarter where midcap growth has been more than 2x of large cap growth. So if I look at my coverage of 97 midcap companies, they've reported a 34% earnings growth, which is slightly ahead of the 23% that we were expecting. And even if we were to remove the solitary OMC, which is there in midcap, which is HPCL, the growth is somewhere close to 25%, which is also ahead of expectations. Large cap was fairly okay, in line at about 10% growth. The disappointing performance came really from the small caps. So our coverage of about 142 small cap companies, they reported a 5% earnings decline, largely dragged by financials, which has been a pain point for both large caps as well as mid caps, especially banks, not the NBFCs. So if I look at small caps except banks, the growth is about 10%. Now, the second interesting conclusion from this quarter is there is a big relief because we've seen 4 or 5 quarters of earnings downgrade. This quarter, we have actually seen a very modest 0.5 to 1% upgrade for Nifty EPS and about 2.5% earnings upgrade for our entire coverage universe put together, which is largely led by midcaps as we discussed. Midcaps have had a 4% earnings upgrade, large caps close to 2%, and small caps have seen an earnings downgrade about 4 to 5%. So all in all, midcaps continue to stand very tall, and which is also reflected in a way we've raised the weights of midcap in our model portfolio over the last 6 months by about 1,000 basis points. So that's how we are positioned now. On a full year basis, we are expecting about 9% Nifty EPS growth for this year, followed by close to 14-15% growth in FY27.
Okay, 14-15% growth in FY27. Gautam, hi, good afternoon. Just coming to you, and we will pick up on some of these details. We've got a story which we want to put out for our viewers as well. So today is the last day for submissions to the discussion paper which SEBI had put out with regards to mutual funds and asking mutual funds to lower their total expense ratio. There were, of course, also proposals with regards to commissions that they were paying out to brokers. And the discussion paper said, well, it should be brought down to about 2 basis points. So what we understand is AMFI is likely to submit its suggestions with regards to SEBI's discussion paper. And Yash is picking up some of the details of what could be in that response and feedback. Yash, over to you.
Well, that's correct, Prashant. It is the last day when it comes to a submission of stakeholder views on SEBI's consultation paper, which had proposed reduction in the total expense ratio, essentially the expenses which mutual funds make to sell different kinds of funds. What we've been given to understand is the Association of Mutual Funds in India, that is AMFI, is expected to submit its suggestion, the industry suggestions with market regulator SEBI on that consultation paper today. And there are 2 to 3 important suggestions which are expected to be a part of that compilation from AMFI, which we picked up. The first one is that AMFI is expected to express reservation with respect to the kind of and the quantum of cut which SEBI is proposed as far as its consultation paper on TER is concerned. What AMFI believes is that the 1.2% or 120 basis points gap in the total expenses which SEBI has proposed for large mutual funds as against the entry or the small mutual funds is too wide. This provides significant disadvantage to large players when it comes to the expenses that they can make versus the expenses which small or entry-level funds can make. Here, what mutual funds are expected to argue is that this would hamper the new fund offers from the large mutual funds as well as the distribution strength and may impact, circulation of mutual funds in tier 2, tier 3 areas as well. Apart from that, AMFI is likely to seek a more gradual TER revision once the fund size increases. They feel that the current revision as the TERs come down is very steep at this point of time. AMFI is also likely to propose the TER cap should start from 2,000 crore onwards and not from 500 crore. These are 3 most important suggestions. Apart from that, one that you mentioned, the brokerage of 2 basis points, AMFI is not particularly happy about that. According to them, it's too low and should be higher.
Okay, so let's see what all of this consultation yields on that all-important aspect of capping brokerage costs at just 2 basis points. And also remember that 5 basis points additional that these mutual funds could charge in lieu of exit loads being taken away. So those are some of the sticky points. And of course, TER, the industry has made its demand. It's now up for the regulator to decide. Gautam, we're coming back to earnings in just a second. But since we kind of digressed into mutual funds and capital markets, this discussion paper, when it came out, I think 2-3 weeks back, right, it caused such a flutter. Wealth management stocks, broking stocks, all stocks, obviously mutual fund stocks, all of them had crashed, fearing that what happens if, you put the cap at just 2 basis points, what happens to, local sell-side research. Just your thoughts on, since then, prices have recovered to an extent, but what part of the space are you still bullish on in terms of valuation as well as growth prospects?
Absolutely. We are very bullish on the entire capital market space, whether it is AMC, wealth managers, brokers, exchanges. I know there are a lot of regulatory upheavals which will come along the way, and this industry has been used to it for the last few years. We have seen so many changes in the last 5 years insofar as regulations of capital market related subsectors are concerned. So there's nothing new to it. I'm sure some clarity will emerge as we move forward. Representations are made and discussions are held. But, let that not cloud the long-term opportunity which is present in this space. In fact, within BFSI, we are most bullish on the capital market space.
Okay, so capital markets it is. And yes, that's been a long-standing call, obviously. We know that. It's been on for many, many quarters now, that bullishness. Okay, getting back to your estimate about this year being a year of double-digit growth. So I'm looking through your note. I mean, I think it's OMCs, telecom, metals, technology, NBFCs, even cement. I mean, these have been the big drivers in Q2. But, talking about the second half, where will the growth impetus really come from? Consumption, capex, where?
So, Sobe, look, insofar as Nifty is concerned, the first half we have seen 5% growth. Second half, we are expecting some pickup on a low base of last year. Plus, a lot of actions that the government and RBI have taken insofar as income tax reduction is concerned, interest rate reduction is concerned. Now, the GST cuts that we have seen. We think the positive effects of all these actions cumulatively will start manifesting in second half, which is why we are penciling in about 14% kind of growth in Nifty for second half and about 15% growth for our coverage universe in second half. So that makes it a full year 9-10% growth for Nifty with an EPS of around close to 1110 and 15% growth for our coverage universe as well. Sectors which are going to lead it are unfortunately the same one. There's not much change that we've been seeing in FY 25-26 as well. That larger sectors with huge weight in the benchmark, which is banks, IT, consumer, and Reliance, they've been a bit of a laggard. If you look at the full year also last year and the first half of FY26 as well. In fact, this quarter also, we have seen a decline in earnings of both a private and PSU bank, or maybe flattish for private and about 4 to 5% decline for PSU. Now, the point is, banking as a space which has been the flag bearer of corporate earnings revival from FY20 to 25. Just to put some numbers on the table, we've seen the profit pool of our banking universe, which is BFSI, if you include NBFCs as well, has gone from 50,000 crores in 2018 to 5 lakh crores in 2025. Now, on that 10x rise, they are now consolidating because the incremental tailwind on asset quality is limited. Your NIMs have seen a big contraction in the last 4-5 quarters. Even if they were to stabilize and move 5-10 basis points higher from here, we're still talking about just about 10-12% kind of a growth for banking, which is a big part of the index. Almost 30% is bank. And if you put together all the weights, then BFSI is close to 37-38%. Large cap IT is also flatlined with about 4 to 5% growth. Large cap consumer staples, the likes of Lever, ITC, Nestle, they're also growing in that 4-5% band insofar as earnings are concerned. And therefore, if you look at the index composition for Nifty, roughly 60% of the index is growing at 5 to 7% kind of a growth. If I were to add up Reliance, it'll make up almost 70%. So index is having a very tough time because the growth is being lifted by sectors which have a very small representation in the index. So likes of cement, capital goods, metals, telecom, and all of that. So till the time you don't see big weight sectors firing at an index level, to expect beyond 12-13% growth will be a bit of a stretch. So real opportunity, I think, insofar as earnings are concerned, lies in non-benchmark, non-index stocks, which is where I've been highlighting that midcaps is where you have a pool where you can still find enough stocks growing upwards of 20-25%.
Okay, all right, Gautam, always good to hear your thoughts. Thanks a lot for stopping by and filling us in with your views. Wishing you a good remainder of the day, and we chat up soon. By the way, from the broader markets, just pull up one stock, Pine Labs. I think that stock should come up for you in the screen. Suddenly, it's seen a bit of a downtick. It was trading in the green, I recall. That suddenly moved into the red, and Sagility is the other one. Both of them have fallen off the cliff just in the last few minutes. Well, time to take a break. Come back. Helios Mutual Funds, Dinshaw Irani is waiting for us.
Welcome back. The market continues to chug along 80 points higher on the Nifty. As always, let's find out what the real movers and shakers of the day are looking like. We've got Hormaz with his list ready. Tell us, what's on it, Hormaz?
Well, the first, of course, has to be the big talking point of the day, and that is Grow. And 1 lakh crore market cap today, 15% higher now. It's been trading for the last 4 days, and on all 4 days, the stock has gained, and on very substantial volumes as well. Listing day, it had close to 60 lakh shares, same as the next day as well. Already we have had close to 45 lakh shares on the stock traded, already worth almost close to 6,500 crores. So that's Grow for you, and that's 70% now higher than its IPO price, which was 100 rupees a share. Rico Auto is among the top gainers on the small cap index today. It's the 7th straight day of gains for the stock, 13% higher today. And in this 7-day winning streak, the stock has surged almost 40%. And today's volumes being the highest in the last 3 months, we've had close to 3.5 crore shares that have been traded on Rico Auto today. The 20-day average is 7.5 lakh shares. And in this 7-day winning streak, the stock has moved above all of its key moving averages. And this month has now turned out to be the best that the stock has had since March of 2024. Idea Forge, we spoke about it in the morning as well, but the stock may have not moved much from then, but the volumes have moved significantly higher. Today's volumes are now 10x of last Friday in itself. We had close to 6 lakh shares traded last Friday. We have had almost 60 lakh shares traded already on Idea Forge. The 20-day average here is 2 lakh shares, and it has a distinction it may not want to have. The stock had doubled on its listing day, but from that post-listing high, it's down 70%, and in fact also trades below its IPO price of 672. And lastly, on the downside is Gabriel India, the top loser on the small cap index today, 11% lower after its results. The 5th straight day of losses for the stock, and in this 5-day losing streak, the stock has declined close to 20%. And here in today's session, we've had close to 17 lakh shares that have been traded on Gabriel India. Here too, the 20-day average is only 1.5 lakh, so declining on very strong volumes. The stock has also broken below its 100-day moving average of 1137, and after gaining for 6 months in a row, November is turning out to be the first month of negative returns for Gabriel India.
Almost, thanks very much for that. So that's an interesting set of stocks as always. Thanks for that. Dinshaw Irani is now joining us. He's CEO, Helios Mutual Fund. Dinshaw, great to have you with us here on the program. Thanks for joining us. Kya aapne grow liya? Dinshaw.
No, unfortunately, we didn't grow along with growth. So, no.
But have you looked at the numbers and all? I mean, there's 1,800 to 1,850 crores in profits, net earnings, net profits in FY25. And they, from what I remember, our conversation, they're saying growth should be between 20-25%. The big bet is that the MTF book will become a much bigger share. That's very, very profitable, not just for them, but for everyone. It's very small right now. It'll grow into double digits. So basically earnings, visibility that earnings perhaps double in the next, 3 years. That seems to be the bet.
Yeah, so we did look at it, but we gave it up because it was too much retail focus as such. The numbers are excellent. The fact is that they don't need the money also. I mean, the raise was mainly to come to the markets, and that's it. So basically, we let it go and we decided to stay away from that. Though we like diversified plays in the capital market space rather than pure play brokers. So I'll leave it here, Prashant, and won't broach the topic any further from here.
Okay, maybe some other topics. Then sure. Any other? So many listings.
What about Lens?
and Dinshaw should be the one talking about smart glasses. Yeah, look at those glasses. Every time we compliment him,
What's the view on Lens?
Okay, so again we let it go. We didn't. So basically, what we decided was that look for these exponential kind of PEs, if you will, or valuations, if you will, you need to have exponential growth rates, right? That criteria was not satisfied by Lenskart. Maybe we're wrong, I don't know. I mean, we let it go. And secondly, we felt that too much of emphasis was now being given to offline stores. The physical stores rather than the online model, which they've really succeeded upon. So that's the two major reasons why we let it go. And maybe we're wrong, as I said, that no, we didn't touch it.
Still fancy spectacles, huh?
Yeah. I should discuss this offline. I wonder where you get those frames from. Need to exchange some numbers. Okay. So Dinshaw, what else? I mean, Q2 is over.
Yep.
Did it inspire you to do anything new, buy anything new, anything different? Because it's all about earnings recovery, right, from here?
Yeah, so Surbhi, actually, I've been doing meetings, small town distributors and retail for the last couple of weeks, thanks to our NFO of small cap, which is ongoing. And I came away feeling that there's a lot of skepticism among the retail. And one of the reasons, there are 3 or 4 major reasons. One of them was obviously the quarterly numbers, and one major one was obviously the Bihar elections. And Bihar elections were decisively out of the way, right? The quarterly numbers, however, I think if anything, there's a positive surprise here. In fact, the first time I've seen upgrades happening in the index earnings per se. So I think it's a matter of, frankly, we were very excited seeing even those 8-9% kind of growth numbers, specifically because the last quarter, at least a month was lost because of the GST rationalization. In the sense, announcement came on 15th of August, implementation on 22nd September. So that everything got postponed. And despite that, and plus the fact that the NIMs, banking NIMs were getting compressed during that quarter, we thought this would be a very bad quarter. We were looking at low single digits, but it came to high single digits, which is a very big surprise for us. And fortunately for us, we didn't have to change much after the results. But during the time of the quarter itself, we moved out from banks, went into financial services, and as I said, diversified plays on capital market also we picked up. So those were the things that we did during that quarter. Consumption remained our core and continues to be our core. So that's how we played it.
And what about, I think NBFCs is something that you'll have liked, right? Earlier as well, and you have that rate cut cycle that's likely to continue, at least a couple of more cuts. Continue to remain bullish on that theme? If you could name a couple of stocks that you'll have in your portfolio?
Oh, there are quite a few, Nigel. So basically, what we did was, as I said, that we moved out of banks and into NBFCs. So we already had Shriram, Chola, and all these guys. So we increased our weight in these NBFCs per se. So that's what we did during the quarter itself, because we realized that NBFCs are suffering mainly because of liquidity, and obviously the NIMs are getting hit because of the high interest rates. And once those cycles turned, the liquidity became enough for them to start borrowing easily from the markets. And obviously the NIMs, they are quite nimble-footed whenever it comes to both ends of the balance sheet. So they could expand the NIMs in a falling interest rate scenario also. So that's what we liked. And that's how we picked up these names. We didn't add any new names, if that's what you're looking for.
Yeah, no, absolutely. Have you looked at car trade in any detail? We broke a story recently that car trade is looking at buying Car Deco, which is also a very large player. Do you own it already?
So we have, Prashant, probably we'll be the only ones who have it in our top 10 or 11 holdings in our FlexiCap fund as such. And we're quite convinced of that stock. We picked it up long back as such. It's been a multi-bagger for us, if you will. But the fact is that even if he takes up Car Deco, the fact is that he's looking at only the online business. They're not looking at the offline business or other insurance arm and stuff like that, which is what we like about them. They're very focused. Even when they bought over OLX, they bought just the online business per se, and the physical business they let go. So I think they've got their game right. It's more of a platform company. We can call it a tech play, but I would rather call it a consumption play, because purely on autos and so ads and second-hand cars, these are the ones which they are into, and they're making enough money.
Okay, so that's on car trade. And when it comes to playing consumption, Dinshaw, how are you looking at it? Still looking at platform companies, anything else? Because most of these companies have been, at least the numbers have started looking good. Even some of the mass retailers, not so much Trent, obviously, that's a different story altogether. But any other way in which you're looking to play consumption in the second half?
So we like the tier 2. Okay, so basically platform companies is what we've always been into. And we play consumption quite differently also, in the sense that we got hotel companies, we got aviation stocks, we got hospitality, which you also call consumption, because that's where healthcare is it's a way. I mean, when you start spending, you spend first on healthcare as such. So those are the kinds. But we also like tier 2, 3 retailers, and we got. I mean, you guys know it, right? Vishal Mega Mart and V2 Retail. These are the kind of plays that we have. I don't think we want to add to any play which is dependent on the marriage story or some cuts in GST as such. I think you need longevity in your outlook, and that's why we like these kind of plays.
Yeah, hotels and airlines make total sense. Nigel's contributing in a big way this December to boosting consumption in those two parts. I'll contribute maybe, in the platform. Food delivery. So, yeah.
I saw his tweet about asking for places close by. So I don't think he's going to spend on aviation.
He's still deliberating. I think we'll see what finally comes out of it. All right. Dinshaw, always a pleasure having you on. Thank you so much for joining in, and you have a good rest of the day. Well, Nigel, F&O?
Well, that's right, Surbhi. And just to give you an update, I mostly will be driving now, so not going flying anywhere. All right, let's focus on the F&O pack then. The Nifty bank, that's the one that's having a bit of a trend day. Beautiful up move is what we're seeing on the Nifty bank today, and that has hit the 59,000 mark for the first time on. You pull up the Nifty and you pull up the 20-day MA. That becomes the first reference point. It's 200 points away from current levels, and till that holds, we've gone very close to that mark. It continues to hold on to that mark, and it continues to move up. So that's pretty good news as well. The Nifty bank, that's the one that's actually leading the way. Moving to the options data, well, you have the PCI that's moved to around 1.1. And that's because the put writers, they feel they're in the game. 25,900 put, 25,950 put. Well, that's been a big open interest build up in both those two strikes, telling you that the 20-day MA, the 25,700 or 25,700, not 27,000, that's the one that needs to hold out just in the near term. First reference point on the downside. Moving to stocks, and we should get some of them, that should move up for you on the screen in today's trading session. Tata Motors, that's the one that seeing fresh shorting in today's trading session. Bid open is built up, and that stock, in fact, is lower in today's trading session. But there are a few other names. Whether you're looking at Angel One, maybe a bit of a rub-off impact with these capital market players doing well. Fresh buying is what we're seeing on Angel One. The stock is moving higher, and the open interest as well building up out there. As is the case with PB Fintech as well. Good amount of fresh buying is what we're seeing on that counter. But a couple of other names, well, they have come in for a bit of a short covering bounce. Case in point being GMR Airports, on its way to around 100 rupees. Clearly, the shots are covering out there, and that's what's causing the stock to move up. And finally, if you look at GMR Airports, that's the one that's come in for a bounce. And Hoodco as well, appears that stock is suddenly finding its momentum. Big volumes in the cash market, and in the F&O market, you're seeing a bit of a short covering bounce. So good going on that name as well, Surbhi.
Okay, all right. Thanks for that. By the way, that source-based information coming in on Emphasis. Blackstone could be looking at trimming its stake in the company. This could happen via block deals. So the company, I think, has responded. This is source-based information that we're picking up. But the company has said that they are not aware of any such sort of imminent plan that Blackstone may have. We'll just, flash the company statement once again. And those are details up on your screen. We'll try and get you more on that story in a bit. I think we'll just have perhaps Ritu joining in to take this forward. Okay, Vivek, we have Vivek with us. He's picked it up from his sources. Vivek, tell us more. What's happening here?
Well, that's right. So, the promoter of the company, that is Emphasis, is actually Blackstone. And Blackstone holds a little over 40% stake in the company. And this is at the end as of September 2025. Now, what we understand from our sources is that Blackstone has gone ahead and reached out to bankers, and they've asked bankers to go ahead and gauge the interest because they want to go ahead and further trim stake as far as their holding in Emphasis is concerned. Now, remember, at the start of the year, Blackstone had sold close to 15% stake in Emphasis. That particular deal had gone through. But we understand even this particular current deal, the deal size may be quite material. And at the current point, what we understand is that Blackstone is, via its bankers, trying to gauge the kind of investor interest that is there to go ahead and launch this particular block. We understand that the deal will have both a base size and also an upsize option in case investor demand is a little better than what it currently is. We reached out both to Blackstone as well as Emphasis. Emphasis did not come in saying that they do not generally comment on matters that are not related to the company operations, and Blackstone said no comments to us. But what we understand is that the deal is will likely happen quite soon, and we understand that this is going to be quite a material transaction as far as Emphasis is concerned.
Well, the stock's down a little bit more from the time that we broke the story. Vivek, thank you very much for that. So it's a large block. It's not a small one. It's a large block. And interest is being gauged by bankers at this point in time. So that is the story with regards to Emphasis at this stage. We'll take a quick commercial break here. We're going to come back with what dealing rooms are talking about and D-Street chatter. Nimesh helps us with that coming up.
Welcome back. Just one stock that we should highlight is CPCL. That's Chennai Petro. The cracks out there have been moving up. The GRMs have been moving up. We had alerted a few months ago that there was some disruption that taken place. That could be a possible tactical play. And that ongoing war between Russia as well as Ukraine, a lot of refineries are getting hit. And the last quarter's numbers are pretty okay. So that stock actually is moving strength to strength. I think the last 2 months, the stock has seen a big 40% move or thereabouts. Big move on that name. But as promised, it's time for D-Street Chatter. Nimesh joins us to tell us what's going on there. Nimesh, how are you reading today's trading action?
Hi, Nigel. And a decent pullback, I would say. Nifty is up 100 odd points. Flows are mixed with a positive buy. So this move is also backed by some bit of buying interest. The PSU stands out in terms of buying flows, and within that, it's a turn for the PSU banks to do well. So I understand there is very good interest in terms of buying interest in the PSU bank stocks in today's market. I guess all eyes will be on the US tariff deal. If that has to happen, maybe you'll see new highs and further rally as well on the Nifty. So that's overall feedback. But today, I guess it's a day for the PSUs to do well, and also the platform businesses across have done well. So Grow, of course, is up 15-16%. But don't but across, if you look at all the platform businesses, whether it's Nika or for that matter, PB Fintech, all are buzzing into today. So that's one space has done well. But I guess today's up move of 100 points on Nifty is backed by FI buying as well.
Nimish, in terms of specific stocks, what's the chatter?
Well, the first on my list is Canara Bank. That's something to watch out for. I spoke about PSU banks. In general, there is interest. Canara Bank stands out in terms of very strong delivery-based buying, so expect high delivery volumes in Canara Bank today. So that's the first name. The second stock is PB Fintech. Even that's buzzing in trade up 3%. Interestingly, there was a Citi note in the morning. They put out a 90-day positive catalyst on the stock, and there is buying as well in general from a larger FIDs. So that explains a big move in PB Fintech today. And the last is Star Healthcare. Well, the stock has been consolidating. I understand some domestic mutual funds have been accumulating Star Healthcare at these levels. And there is, in general, anticipation of some corporate development as well as far as Star Health is concerned.
Okay. All right. Nimesh, thanks very much for getting us all the buzz. We will quickly hop across to Mitesh now and get a final sense of trading calls for the day. Mitesh, what are the final stocks you'll work with?
STVT actually an emphasis. One stock which is nearly days low, such as slightly weak, so keep a stop at 26.96, 26.95, just about that. The target of 26.60 on the downside possibly can be explored, and VTST on Nika, which is at a fresh swing high, so keep a stop at 266.25, look for targets of 271 to about 272.
Okay. All right, Mitesh, thank you very much for that. Some final trading calls going through. By the way, Grow 17%. It's just not stopping, is it? Absolutely. Growing and how? What a breathtaking move. 100 rupees was the issue price. They came to the market offering shares at 100 rupees. The market has ascribed a value. The market is saying 170, at least as of now. Phenomenal.
Yeah, and though Grow is taking all the, the limelight, take a look at Lenskart.
Above morning, it was 412. I don't know where it is now.
It's 430 rupees, 428 rupees right now. Yeah. On the day of the listing, the stock was down 10%.
Correct.
Now, obviously, there's a float factor in here. There'll be shares that are locked in as well. I think the low hit was around 360, and currently it's at around 427, moving on very, very large volumes as well. So these new listings, debatable in terms of valuations for the time being, whether it's the lock-in, whether it's enthusiasm of the IPO market, but these stocks are on fire.
Up and away, indeed. Well, let's start right there with Sudeep Bandyopadhyay. Sudeep, good afternoon. Great to have you on the show. Taking a breath away, these listings, right? On Grow, what's the advice now? 100 has become 170 in a matter of a few trading sessions.
Absolutely right, Sudeep. I think I've been positive on Grow, and I think one of the earlier interaction, I did mention that it is a stock worth buying. Even when it listed at around 120, 130 levels, it was worth buying. It's moved up a bit too fast, so may not be today. But opportunity comes, a little bit of correction. Grow is definitely worth buying. This is a company which is going to get into a different orbit. Look, they're the largest broking company with the largest number of customers and all that. But the other revenue streams are just about getting built. The lending against shares, which is going to be a huge vertical because they have an in-house captive client. That's getting developed now, and it was very, very small last year. So that is a very profitable business for other broking entities, and I'm sure it will become so for Grow. Apart from that, forays into fund distribution, wealth, and other things which are adjacent will also give Grow a significant opportunity for growth and improving the profitability and returns. So I think we are probably seeing just the beginning of the growth phase of Grow. So yes, it has moved up pretty fast. So a bit of pause is probably warranted. But from a slightly longer term perspective, it definitely does look good even now.
Earnings visibility is there, and that's what I think markets are paying up for. Almost 20%. As we were speaking, it's moved up to being about almost 20% higher. So that's 178 on Grow. So 112 listing to almost 180 rupees now in about 4 days, 4 or 5 trading sessions flat. Nigel was talking about Chennai Petro. MRPL is the other one, which is about 7% higher, 184 on MRPL. And, I think at the margin, the other thing which is, apart from what Nigel mentioned, what is maybe incremental news is this weekend news flow that a large refinery in Russia, and I think this is the first large refinery in Russia, which is actually been hit by Ukrainian strikes. We don't know exactly the status, but it's a very large one. Russian export of diesel, for example, is about 1 million barrels per day. We don't know how much of this capacity, in terms of how much of the actual capacity comes from, but this is a large facility, a refining facility in Russia, and whether it's going to be out of commission, how much is going to be disrupted, etc., etc. So it's just one more kind of at the margin factor, maybe a powerful enough factor for these companies. Maybe we should just look at Reliance as well, because Reliance is the other one where there is going to be this playing out. I mean, there are two important factors for Reliance. One is refining, which is one of the most profitable segments for Reliance. The other one is, of course, company specific, which is at some point they're going to file for that, IPO, and we'll have to see the telecom business, and we'll see if that happens early next year or when. So that's the other one.
Just one word, normally we see crude oil prices as well as refining margins. They go not, in absolute tandem, but there is a correlation out there. However, that correlation is broken because of this ongoing war. It seems the Ukraine is, hurting Russian refineries. And that's why now you're seeing that actually GRMs are moving up and crude oil prices actually has been weak or is it slower. So that correlation has broken, and this was something that we had highlighted, I think, in August or thereabouts, that normally there is a correlation, but that correlation was breaking at that point of time. And crude actually is down from there, and GRMs are much higher from there on. And because of the kind of cash that the core refiners, Reliance, yes, around 30%, I think, as you said, of their earnings comes from there. But otherwise, MRPL as well as Chennai Petro, which are the core refiners, their balance sheets as well are in, far better shape. Case in point being CPCL. 10,000 crores was the debt. That's come down to sub 2,000 crores. So it's a tricky space. It's a very, very tricky space. But it seems as of now that tactical play has definitely worked, in favor.
Yeah, and there were, I think, in the last, 24 to 48 hours, there have been 2 strikes. One on a refinery, Ryazan, I think is the name, which is in mainland Russia near Moscow. And the other one was a refinery, close to the
one which is
Black Sea,
which
over the weekend, That one has resumed. So there, Sunday shipments started again, which is why oil prices cooled off a little bit today. But the region is absolutely hot in terms of geopolitical risk. So that remains a concern.
I'll tell you, on Chennai Petro, right, FY21, just looking at numbers, right, and I was talking about tricky, they did 250 crores in profits in 2021. 22 was 1,350 crores, 23 was 3,500 crores, 24 was 200 crores. So it's, it's a pretty, it's very, very volatile, very, very sensitive to underlying, it's a volume game. But when you get these kind of unusual disruptions, profitability can go through the roof, as we've seen for these companies. We'll take a quick commercial break here. There's about 8 minutes to go for market closing. We come back, continue our conversation with Sudeep.
Welcome back. Well, just three and a half minutes to go before the day closes out. Sudeep, we got your take on one listing. What about the other one? Lenskart. That really was drumming up a storm, right, on the whole 200 PE. The stock's still going higher.
Well, I'm surprised, and I don't think I will recommend buying Lenskart. There's no fundamentally a problem with the company. It's a good company with a good business model. International expansion is doing good, and I'm sure over a period of time they will, do well. But the valuation definitely is not really acceptable or palatable at this stage. So I would definitely stay away and advise people to stay away. We have seen many of these new age companies getting listed, the excitement, and there is a sharp correction later on. We have seen that getting play out with Paytm, Zomato, and a whole lot of other companies. So, yes, Lenskart is still going up and there is a lot of excitement, but I think it's better to stay away. When the locking period gets over for many of the investors who have got the shares, I think the real game will start. So it's better to stay away.
The test is when that lock-in period opens. Got that, Sudeep. You mentioned Eternal, Swiggy. What is the view out there? Both of them have come off considerably from the top.
I'm positive on both the stocks, but if I have to pick one, I'll pick Eternal. See, these businesses, Nigel, it's a winner takes all. So, and Eternal has been, all the segments, they're doing much better. They're gaining market share, and they have a conscious policy to grow market share, even take some hit in the profitability, but grow market share. I think that's the right strategy. Overall, I think Eternal, from a long-term perspective, definitely looks good at current levels.
Okay, so some idea for the new age investors in new age companies of India. Got it, Sudeep. Thank you very much for joining in. We'll just quickly recap today's market action. It's turned out to be a good session. No two ways about it. The Nifty's managed to put on a ton, and we are going to get a close above the 26,000 handle. Lots of hope in the air, right? Hope that the next major trigger for the market, which is some kind of a trade deal, some tariff reduction, that perhaps could be on the cards. And today's statements from the oil minister, Mr. Hardeep Puri, they really inspired confidence, with India looking to sign big LNG cargoes from the US. Anyway, let's talk about the winners then, what worked for the Nifty. Financials, IT and auto, and also some consumer. So Eternal is the top winner, 2% up on that stock. Tata Consumer along with it, almost 2% up there as well. Then, like I said, autos, Eicher Motor, Maruti, Bajaj Auto, M&M. These stocks have gained anywhere between 1 to 2% a piece. Then we come to financials. Kotak Mahindra Bank having a good session, 1% higher. Bajaj Finance, another 1% higher. HDFC Bank, 0.7% higher. In fact, the Bank Nifty did really well. The Bank Nifty's gains are double of the Nifty. Bank Nifty is up 0.8% as we are closing out. SBI, ICICI Bank, all of these names chipping in. And then you had the other big heavyweights like L&T up and about. Infosys managed about a 0.25% gain. So really not much to complain in this market at all. On the downside, there was some profit taking on Asian Paints. Remember, it had a monster rally after the numbers last week. And Tata Motors PV stands out, absolute washout quarter. And the market gave it an adequate drubbing, 5% lower on Tata Motors. Nigel.
Well, from the broader markets, kept growing all through the trading session. Goes home, circuit 20% up. Lenskart, everyone was rubbing their eyes. They're rubbing their eyes still because the stock, in fact, is much higher from the lows.